TCGs. As we know already, it stands for Trend Reversal Gartleys and Trend Continuation Gartley patterns. And that's what we're going to be looking for today. In this session, we're going to crack open Market Analyst and we'll start visually looking for Trend Reversal Gartleys and Trend Continuation Gartleys. As we noticed in the previous section, the Trend Continuation Gartley is the most common trade setup of the Gartley pattern, and so we'll focus on that first. It's the easiest one to find, and then after that we'll move on to the Trend Reversal Gartley along with the volume rules, and also looking for the WX leg that precedes the X point of the Gartley pattern. So let's get into it and have a look for some Trend Continuation Gartley patterns. So here's the home page of Market Analyst, and you'll notice over here my recent workbook is indices. So let's open that up. Okay, so here's the BSE 30. This is from India, and we're going to look through the chart for a Gartley pattern. Now you notice when you first start looking for Gartley patterns, it might be a little bit more difficult to find the AB equals CD with calendar days turned on. So what you could do is go over here under Properties, under your Control Panel, open your Control Panel and go over here to Calendar Days and turn that off. And if we scroll through here now, you can see that the bars are squished together with no spaces for the weekend. That can help you find the AB equals CD a little bit easier. So when you're first starting off to find these things visually, you might want to do that. So I'm going to delete the projections I made here previously, and to do that I can just get rid of the entire layer here. Whatever multiple amount of technical methods I've put on the chart, I can just right click layer and hit delete, and they're gone. So what we have is, first of all, a trend move. If you're an Elliott wave guy, I'd say wave 1, 2, 3, 4, 5, something like that. And the first thing when we're visually trying to find these Gartley patterns is the AB equals CD. And if you go from the high down to here, there's definitely a swing here, but it looks like this rally right here is not as big as the one that you see right here. That seems to be right around the middle of this downward move. So that's giving us an idea that could be an AB equals CD. To emphasize these legs, I'll just use my trend line and draw from the high to the low. This trend line is a geometric trend line. It gives you the angle on the trend line. You can turn off the angle if you want. So not to confuse you, I will turn that off and set it as default so we don't have to keep looking at that. Settings as default. Okay, good. So now let's do another trend line here. And rather than going up here, I can go to the wrench and look at the most recent tool I use and just click that, so it's pretty easy to use it that way. So they're not the same angle, but the price range looks to be about the same, and the way that we're going to find that out is by using our price retracement or price extension tool. And so we can go up here, price extensions, and click the high, click the low, and then click the high again here and drag that across, and we can see that's the 100% level. We can also label the chart so it's clear. Let's go to drawing, and we go to text box, and we can just type in the letters here, A, whoops, A, off the crosshair and the lock here. A. I can copy that too. Go copy, paste, and just change the letter to B. Copy that one. Copy, paste. Change this one to C. And copy, paste. Call it D. Okay, so there's our projections for the AB equals CD on this move. Now let's do our price retracements. So go to price retracements, and we'll turn the lock back on here. low, high, drag it across, and this is what we need to do. Once we have made our end of wave C, or our D projection at the red line here, we got to see where that lands in relation to our Fibonacci retracements. So we look at our retracements here based on our Kepler triangle from 38.2, 48.6, 61.8, and 78.6. We also have 100% down here. As you'll see in the Gartley trading method, trend continuation Gartleys can be called TCG 786 or TCG 100. And what that's referring to, yes, it's a trend continuation Gartley, but what number are we expecting to find support in this example? Well, because this deep point projection is landing closer to 786 versus any of the other Fibonacci ratios or even the 100% level, this would be called a TCG 786. To get rid of the Fibonacci retracements, simply go to remove selected level, right click, trash selected level. There you go. So we got the 786 left here, and that's all we really care about at this point because this is a TCG 786. This creates a zone from here, the 786, down to the D point price projection. The question that's asked is, what line has the greater weight? Should we use the red line to enter our trade, or should we look for the blue line to put our trade on? Or, well, it's up to you, but there's a bias between these two lines. So the market will often react more often to the price retracement level versus the price extension level. So if you were going to use one of these two lines to put this trade on, you would use the 786% retracement to put this trade on, which in this case would be at 16,165 versus over here at 16,025. So if we're going to use the 786 level as an entry point, we could even get rid of this line now. Right click, remove price extension, because we're no longer using it to enter the market. We're simply using it to confirm that we got a TCG 786. And remember Gartley's rules for where our stop is going to go. We put it below this low over here. And that low is at 15,652. So don't put it at 650. Don't put it at 651. I would use a number such as 646. Or even better, 647. Try to use the last digit as an odd number because I'm not a numerologist, but numerology teaches that the odd numbers are numbers of power because you can't divide them anymore. And so people have a tendency, the market has a tendency to not go to those numbers. It will go to the ones that people are using, and more often than not, you will have a tendency to want to start using even numbers or ones that end in 5. So there's a nice little trade setup here. The Gartley worked out well. We would have been a buyer here, put a stop down here, and we'll show you some techniques a little bit later as to how you'd manage this trade once you put it on with multiple contracts and trailing stops and changing time frames. Let's look at some more examples. Okay, here's another one over here. This is the index in Brazil. Once again, I'll open up my control panel, delete the layer, nothing left there. It is a calendar day chart, so to make it easier on you, I'll turn off the calendar days. Scroll back to this trend continuation Gartley. So we can see the market was going up, had a pullback. Up, pullback. Can you see the AB equals CD? Okay, I'll draw the trend line just so you can see it. There, and there. Okay, if we want to put the labels on, we can go over here to our text box, and let's turn the lock off. So there's A, copy, paste, B, copy, paste, C. Copy, paste, D. Okay. So now let's get rid of these trend lines here. And we'll use our price extension tool, price extension. Turn the lock back on. Third data point right there. Drag it across. There's our 100%. So at this point, C down to D over here is exactly the same as A to B. Now that we've done that, we've got to do the price retracement tool. So we go over here, price retracement, from the low to the high, drag that across. And once again, we look at the price extension tool. What level, what Fibonacci retracement level does that land close to? Door number 1, door number 2, or door number 3? Obviously door number 2 here at 48.6, right? So now we can get rid of these other ones. Remove selected level, oops, let's select the level here, selected level. Okay, so there you have it. This is called a TCG 486 because it's obviously a trend continuation. So this was a low. This beginning point here, the X point, is not a significant low. This one was over here, so this would definitely be a trend continuation, Gartley. So we got a trend move going in the same direction as this leg over here. So this first XA move, and then we got a correction A, B, C, D down to here. And once again, we have confirmation of a 48.6% retracement. So now that we have our 100% projection plotted here to identify that as the preferred Fibonacci level, we can delete it if we want. So we take that right off, and then we can use this as a level to get in, which would be 64,527. Where would we put our stop? According to Gartley, you'd put it over here, but you might think that's a lot of risk. That's okay. We'll talk about different methods of entry here in a moment. But let's look at some more TCGs first before we start getting into entry. We're looking at trade setup opportunities right now. And don't forget there's a difference between the two. There's the trade setup and the trade entry. The setup is what we're focusing on here right now. We're looking here at zones of support and resistance that are created with these price extension and price retracement lines. Once we find a zone like that, then we start looking for opportunities to enter the market. One of the ways that I teach in the Gartley trading method book is by putting a trade on as it touches the Fibonacci line. Some of you might feel uncomfortable with that. That's okay. I have other alternative methods to show you here. But let's move on and look at some more examples. Just look at the next page here. Did I find one in the CAC? Oh, there's one here. Okay, so once again, I will change this to calendar days. It's easier to find these things. Okay, and then let's turn off, delete that. So now here we are. It looks like maybe there's a AB. Maybe it looks like a CD, like that. The only way you're going to find out is by, well, one of the ways you're going to find out is by using the price extension routine. I'm not going to label the chart anymore here because I think you know how to do that. It just takes up more time. So let's use our price extension tool. We go here, we go there, we go here, and drag it across. So there's our 100% line. Notice I'm not using the other Fibonacci numbers in the price extension tool. And then we're going to draw our price retracement lines. Now, here's a classic example of, Ross, which high do I use? This one here or this one over here? The most important one that you can look at, it really, there's a number of factors that we'll be looking at the higher levels of the geometric trading course as to why we would use certain points of price and time as our significant reversal points, and sometimes it's not always what you think it is. Here's another example over here. Do I choose this low or this low? All things being equal, the first thing I'll tell you is, in this example, we're going to use this high here versus this one over here. Even though this one here is higher, you can see if I drag the line across that it is higher than that second high. But the reason you're going to use this one here is simply from the point of view of a person that is trading this CAC 40 index, for an example. Let's say you sold it. You sold it in this zone right around here somewhere. Now, what numbers are you going to be thinking of right now? You're going to be wanting it to go down, so you're thinking, oh man, I need it to go down below this low over here at 58.37. The other thing that you're thinking is, I know I'm really going to be wrong if it goes above this high here at 61.68. So those two numbers you're going to be thinking about, right? And then it goes sideways, it goes up, it goes down, it's starting to trade within this range, and you're still remembering the high and the low here. Okay, and then you get over here and you're starting to get pretty nervous because it's going against you, but it still hasn't taken out this number over here. You remember the 61.68 like the back of your hand. It's a really important number because you know if it goes above that, you're going to be really concerned. So as it starts moving higher and higher, you're getting more and more worried. And then it starts to turn around. And it goes down, and it goes down, and it goes down. And as it continues to go down, the number, you're going to forget about this one over here. You're now going to remember this one over here because that's really when it started to begin, this downward move. This is going to be a really important. You won't forget this old number, but this is more important to you now, because it obviously turned at this point and start moving down. So you would remember this level here, 61.56, more than you would this one over here. And as time goes by, remember this is a matter of, let's see, this is July the 4th, or June the 4th to July 13th. I don't know about you, but most of us start to forget things after a while. And you'll start to forget this number just because as time goes by, you will. And you'll remember this number more because it's more recent. So that's, in a nutshell, why I'm going to use this high. Psychologically, for guys that have been looking at this, wanting it to move down, you're going to look at the most recent significant high, even as it retested this previous one. This is where it all starts. So let's do our Fibonacci price retracement from this high here. And just a reminder, I don't have to keep going back up here to the toolbar. I can just right click, go to the wrench and hit price retracements. It's really fast if you click there. And you go down here, drag it across. Once again, we can see that the extension, the red line, is closer to what? 61.8 versus 78.6. So with that being the case, we can now get rid of these selected levels. We don't need them anymore, even though it was pretty cool. Remember, Gann said that 48 or 50%, which is basically the 48.6, see how it respects this level. Even though that's cool, we're going to delete it. And this one here. Okay, so now that we have that going on, we can even get rid of the price extension line because it's done its job. It's told us that the preferred reversal level is going to be at 61.8, so we could delete that now, and we can see that that worked out nicely. So this is called a bearish TCG 618. So it goes up there. Once again, if you could use this level here above here as a stop. And this is obviously a double top. These two highs are so close to each other, it's almost not even worth talking about. came in down nicely after that. Okay, let's look at some more trade setups. DAX. Oh, there's one. Okay, so let's turn off the calendar days. You might as well get used to using them. I'm not going to turn off the calendar days. So let's turn off this layer, delete. Okay. So this one here is a bullish one. Actually, we got two here. We might as well look at both of them. I didn't even notice this until now, but you got two back to back, and then it goes down, makes a new low. So you have two bullish Gartley trade setups here. Even though it goes down to make a new low, you could still make money on these things, no problem. So let's look at the first one here. It looks like A, B, C, D. I'll draw the trend lines just so it looks clear. The A, B. You'll start to get, you have to do this for a while, and then you'll start to be able to see them. You start to do this for a while, and you start to see them visually like that. Okay, and then we'll do, here I'll just right click, trend line. Right click, trend line. Okay, so you can see that. A, B, C, D. A, B, C, D. There's two of them. So let's just work on the first one. Let's just delete the whole layer here. The first one, we'll do the extension first. Price extension from the high to the low, from the high, drag that across. Okay, and then we do our retracements. We can just right click, wrench, price retracements from the low X to the high A, drag that across. Now, this is an interesting example that you have to look at here. What these retracement levels and extension levels are telling you here, remember I said the extension has to be closer to one of the fib numbers versus the other ones. In this case, the extension line is closer to the 100% level. So the level where we're expecting this bounce to take place would actually be at the 100% level, because that's where extension level is telling us where this market should go. However, it didn't get down there. That's okay. You didn't put the trade on. Okay, so it's telling us that the market should bounce at the 100% level. So we're expecting a trend continuation, TCG 100%, but it doesn't go down there. We don't put the trade on. That's fine. So let's get rid of that layer. Delete. Okay, so let's do this again. We'll go to price extension, and we take the high to this low here, and then from this high, third data point, drag it across. There's our 100% level for the price extension. Now we do the price retracements, low to high, drag it across. Nice. This is right beside the 786. Ideally, you want the red line to land right on top of one of these fib numbers. The closer, the better. However, it hardly ever happens. I think I got one or two where it does happen in the examples that we'll be looking at here. And so at this point, we can just get rid of these Fibonacci levels. Select this one here, remove selected level. Okay, so this is a TCG 786 right here, and we can even get rid of this price extension line now. So once again, you would be a buyer right on the 786 number at 2023 and put your stop below this point here, this X point, and that would have moved up nicely. Even though it went down to make a new low, you would have made money on this, because as we'll find out, we'll be trading multiple contracts and using trailing stops. Okay, let's look at another example. Okay, here's the Dow. There's one over here. Where is it? Okay, so right here, get rid of this layer. Zoom in here a little bit. Okay, so obviously a strong trend move there, and it's obviously it is a trend continuation Gartley pattern that we're going to be looking for. So A, B, C, D, price extension tool. And then the retracement from this low to this high. Okay, so this is an example of a time when it takes a little bit of brain power. And notice how this price extension line is right, it almost seems right in between it seems to be right in between the 618 and the 786. It is a little bit closer to 618, so that's the Fibonacci level that you should expect the reversal to be at. And that's exactly what happened pretty much to the tick here. The low was at 89. Yeah, it was exactly the same price. So 618 was the number on this one. This is the cash market on the Dow. And I'm not going to keep on taking these levels off. You can see it yourself. It comes down, it bounces exactly at 48.6 and then comes down to 61.8. Now I just wanted to mention something else too in regard to these Gartley patterns. Some authors that talk about the Gartley pattern overcomplicate it. You notice that I don't care really if this bounces at 48.6 right here. As long as I got something that looks corrective where there's symmetry between the A, B, and the CD, that's all I care about. I don't really care. I've looked into it, and if you start getting too stringent with these patterns and you need to see this low hit a fib number and this high hit a fib number, retracement of 618 of here, and then a external retracement of this low to this high of 1.27, and you can just overcomplicate this. And I just want to say this too, humans have a tendency to overcomplicate things, and you'll see it even with the technical analysis. Elliott wave, when R.N. Elliott talked about it, was a lot more simple than what it's become today. It's become so incredibly complicated. Actually, I believe that you're doing yourself a disservice by overcomplicating your technical methods. It's really quite simple, and simple geometric shapes, as we discuss at the higher levels of the geometric trading course, will allow us to give better forecasts. So anyways, here's the low, here's the high. We don't want to overcomplicate this by looking for Fibonacci ratios between absolutely everything. If it's there, great. Even better, it gives even more reason to believe that this thing's going to work. But if you start looking for all those relationships, it's going to get way too complicated, and it sounds like someone might be simply trying to sell you a piece of software if they convince you that you need to get software to find these things. You don't. I'm using market analyst here, but if you had paper charts, I can show you the square and a compass how to do geometric trading. And that's what makes you a trader, is when you can make a trading decision without all these peripheral appendages. You should be able to do this just visually, and that's why I'm showing you how to do this right now just by looking for them. Remember, here's the eyes. We can turn this off now. Can you see it? Can you see the trend followed by the counter trend? It's that simple. Now, when you turn these things back on, you can see it. Okay, 618, there it is. We'll use that as our entry signal. Okay, let's look at some more examples here. Okay, here's one. Turn off the layer. So really, I'm not even going to talk about what markets these are. This just happens to be Jakarta Index. This applies to pretty much everything. It just is mass psychology that we're trying to predict what's going to happen next. Now you can see even that this one, it looks like it fails, but based on the rules that you'll learn to trade the Gartleys, this is still a profitable trade even though you're trading against the downward trend here. So here's the symmetry, AB equals CD. So let's do the price extension from the high to the low. high, drag that across. If you're having trouble finding the highs and the lows, you can also put one of those, the percent swing overlay on your chart. Turn it off if you want there. And then we go down to the low. Once again, percent swing overlay is going to tell you, okay, it's this one here. And so we go to price retracement from the low. Oops. Actually, pardon me, we're going to take this low here because psychologically that's where it started taking off. So we'll go here up to this high, and there we go. This 100% level closer to 786 versus the 100%. So our bias is towards the 786. And you can see it did pop up sideways for a while, and then it came back down. As I mentioned, with the stop here, entry here, multiple contracts, we would have hit targets to make this a profitable trade, even though it went down. Okay, let's move on here. Oh, what's that? Let's have a look here. Get rid of the layer. This is Mexico. So once again, we have, even though it took a dive here, we have a bullish Gartley pattern, trend continuation, right? Pullback, trend, pullback. Here's the A, B, C, D. Okay, so let's do the price extension. So you notice how I'm doing the extension first all the time? It's because that's the first thing that you're going to see on the chart that really jumps out at you. So there's your 100%. Now we do a retracement from this low, the X point here, up to A. So we go to retracement, low, high, boom. Okay, there's one of those times when it lands right on top of it. This is the ideal situation. So your signal is to buy at 47.19, and you'd have a stop at 45.63 or something like that. So like I mentioned, it would have went up. You would have made some money, and would have liquidated up here with the trailing stops, volatility trailing stops that we use. Okay, let's look at some more. Okay, here's a Nasdaq. Get rid of the layer. Okay, trend, counter trend. Pretty easy to see that now, right? A, B, C, D. So we'll do extension. And the retracement from the low here. Retracement. Okay, where does it land? Right beside the 786. We're not going to be buying, even though it's a better signal, we're not buying at the 100% price extension. We're buying right here at 24.15. Stop below 23.31. Let's look at some more. So these are all daily charts, so we don't expect to find these every 10 minutes, of course. Okay, so you can see it now, I'm sure. Trend, counter trend, trend, counter trend, A, B, C, D, extension. You'll start to find these things pretty quick. There, and then retracement. You'll start to visually see it. It's obviously going to be a 786. See? There you go. So once again, as Gann mentioned, 48.6, 50%, nice little support level there. Next most important in his opinion, 75% or 786, which is right here. So nice support. Stop over here, and know what's funny about this trade? Check this out. Crazy, huh? So anyways, I didn't do that one, unfortunately. Okay, let's find some more. Sol. Okay, trend. Obviously a trend. And, you know, where's the X point? Down here, down here. Where are we going to put the X point? Well, obviously this is a sideways range here. You know, obviously we have resistance there. Probably looking something like a triangle going on here, right? Okay, so where are we going to put the X? Here or here or here? Remember I talked about if you were trading in this zone here, as you're getting closer to the end of this triangle, you're going to be starting to focus on certain numbers. The number you're really going to start focusing on, especially once it breaks out of here, is this low. So that's what we're going to base our retracement on. But first of all, let's look at the price extension routine over here. And we'll do the retracement on this over here. Low, high, and there you have it. It's closer to 48.6, so that would have been the place you'd be putting the trade on. According to Gartley, your stops over here. We have alternative methods to use stops and manage this trade. There's a chance that you would have put this thing on and would have been out over here before it came down. Even though it found support here, some people, when they see something like this where it finds support, they'll put a trade on again. Because you look at the overall pattern and it seems like this is clearly a level of support. You can definitely think that this might be a viable place to put a trade on right here. Even if you got stopped out, you can put it on again and do that one, do the second trade. Let's look for some more examples. Turn off the layer. Okay, obviously a trend continuation. Trend, counter trend. AB equals CD. Price extension, high, low, high. There, retracement, low, high. Okay, red line is close to 786. That is a TCG 786 Gartley pattern right there. Would have bought at 1,564, stop below 1512. We've looked at a few different examples of the trend continuation Gartley pattern, or TCG. Often we would see a trend followed by a counter trend from X to A. The trend is in the same direction as the previously established trend, and this is followed by a correction, AB equals CD. So we used our retracement and extension tools to identify levels of support and resistance to put on these TCG or trend continuation Gartleys. Now we're going to look at trend reversal Gartley patterns in our next section entitled TRGs and TCGs Part 2.